Jesse Colombo, welcome. Thank you very much for being here. I know you're just like, I don't know. We're always dragging you for the Underbelly podcast. You and I were talking about the strength of the dollar. What's going on with the dollar out there?
Well, that actually relates to what John was saying, how you have the rising interest rates in the United States. Well, what's happening is it's encouraging more money to come in from overseas, or basically bringing back capital back into the United States. It's flowing back into the U.S. dollar because there's higher interest rates, so they're trying to look for a return, basically. So it relates to an article that I wrote earlier this week called "The Smart Money is Bullish on the Dollar." And what's interesting is that when I wrote that, the dollar was mostly in a consolidation pattern known as the triangle. If you go to realinvestmentadvice.com, you can see that report. I believe it was on Monday that I published it, Monday afternoon. And you can see for the last 2 or 3 months, the U.S. dollar index was consolidating, and it's basically been squeezing to a fine point, so it forms what's known as a triangle. And usually when they break out, either to the upside or to the downside, there tends to be a powerful move. So what I was showing in this piece was that the smart money, or the commercial futures hedgers, who tend to be right at major market turning points, were extremely bullish on the U.S. dollar. So for me, that increased the probability that there was going to be an upside technical breakout, which ended up happening over the last few days. And since I wrote that report, not that I was making any wild predictions or anything, but I was saying there's a higher probability of there being some sort of a bullish move in the dollar. Since then, the dollar's been going up, and I believe it may have even more legs, basically, as this trend continues. Also, for the other reasons why I'm basically about to discuss here, is the fact that, well, if you look at the U.S. dollar index on the 5-year time scale, basically the weekly time scale, you can see every time the smart money became bullish, or as bullish as they are right now, there was a major dollar rally. So the last time we saw that was basically early 2016. Early 2014, when there was a huge dollar surge, and that dollar surge basically put the kibosh on the oil bull market, because when the dollar goes up, it hurts oil and other commodities.
Mm-hmm. Right.
So because they're priced in dollars.
Right, because they're priced in dollars. So what's interesting is that the smart money are as bullish on the U.S. dollar now as they were back in 2014. So there could be a pretty dramatic dollar surge, which is something I'm concerned about. Same thing in 2013. U.S. dollar had a bit of a rally after commercial hedgers or the smart money became as bullish as they are now. So, and then what's interesting too is that you're seeing the same pattern basically, but the inverse in these other currencies, these non-U.S. currencies, like the euro. You're seeing the same thing in the British pound. You're seeing the same thing in the Japanese yen. They all trade inversely with the U.S. dollar. So when the euro and the pound, the other currencies go down, the dollar goes up. So you can see the smart money are actually extremely bearish on the euro. And again, it's hard for me to convey a chart right now, but if you go on the website, you can see that. Basically, you can see that before the euro plunged in 2014, the commercial hedgers of the smart money were bearish to a certain degree. Well, they're actually much more bearish now. They have 200,000 net futures contracts short on the euro, so they're expecting a decline in the euro, which would boost the dollar.
Yeah. Now to talk on the macro scale, because I'm looking here. It's like since February, that was kind of when the Bloomberg dollar index kind of hit a low, and it has been kind of steadily climbing, and it looks like it's on a steady climb right now. Now, when we were talking about the increase in the dollar,
right,
we talked about how it's like when the dollar goes up, that means our exports, what countries pay for our stuff, gets more expensive for them.
Exactly.
So that can decrease our exports.
Correct.
But
deficit.
but then our imports can increase. So then consequently, that means our trade deficit gets bigger.
Exactly. And then the inverse is also true.
Yeah.
So not that there's been that much of a movement in the dollar to really make a big difference at this point, but obviously if this trend has legs, then we become more concerned about the effect on the trade deficit. But my number one concern is the effect on commodities, particularly oil, because as I was saying, speculators, or the dumb money, they become the dumb money when they reach a very large position in one direction or the other. These speculators or hedge funds have been extremely bullish on oil. And if you see that, it's really the last chart that I have in that blog post, you can see that it's basically unanimously Wall Street and the hedge funds expect oil to continue going up, whereas the smart money, who are the hedgers, are betting on the exact opposite. So my concern is that if the dollar continues going up even more, it could really basically put the end to this rally in crude oil and cause a major liquidation sell-off.
Mm-hmm. Jesse, you know so much about currencies. What is go through again the effect of interest rate? A currency becomes more valuable when rates go up.
Exactly.
So that's hence the dollar's becoming attractive.
Correct.
Does that mean? Do you think rates are going to stay where they are? Is it easy to say that, or too difficult?
Well, in terms of rates, right now a lot of it's just technical trading at this point, because really we're looking at 3% is a major resistance in the 10-year, and it looks like it bumped its head on that, and it's heading back down.
Right.
So Michael Leibowitz, one of our analysts, wrote a really good article about that about a month ago, or really at the last Fed meeting, and he was saying that there's no way of really predicting and saying in advance, this is going to go here. We can only really take a reactive approach and see if it breaks those key levels in a decisive manner, or if it tries to do it and it can't do it and falls back down. Right now, it seems like it's bumping its head and it's falling back down.
It does seem that way, sure.
So, but in general, the trend of rising rates is bullish for the dollar.
Yeah.
It has to do with interest rate differentials. So basically, our interest rates compared to interest rates in Japan and Europe and so on. So if our rates are going up at a faster rate than interest rates overseas, then it's going to attract more money to invest in our bonds, because they can earn a higher yield, basically.
Right.